I can pack up the house and give it back to you. You can have it. If you own a newly constructed home or you're buying a newly constructed home, stay here. So tell me how I signed a document with all the documents signed, your payment 1907, and you signed 1 million documents. Now a year later, they hit me up in February talking about your payment is $34.50. I bet it ain't. I bet it's not.
I'm Cynara Anderson, a real estate agent licensed in the state of Illinois. Today I want to talk about these TikTok videos where these homeowners are stating that they have received notice from their lender that their mortgage payments will increase, and in these cases, thousands of dollars a month. Let's dig into why this is happening to them and how you could prevent it from happening to you. If you are enjoying this video, I hope that you will like, comment, and subscribe. Please, I'll greatly appreciate it.
So the first year when you buy your home, your newly constructed home, they're only charging you for the taxes, the property taxes on the land, the raw land. Well, the land was only worth $60,000. Well, now that the house has been put on it and now there's a development around you, that now that land this year is worth $110,000, and they put a 400 and something, almost $500,000 house on top. So now your taxes are gonna go to correct. So now your mortgage is going to increase. Now, when they done tell you got a fixed rate, you got a fixed payment and all, they not explaining to you that the property taxes will increase that payment. My payment went up to $34.50. How? Because I can pack up the house and give it back to you. You can have it. So they send a little letter. I called, because with this letter, don't send no letter when you talking about my money. I called a lady. The lady basically telling me, yeah, somebody should have told you. They didn't tell me, ma'am. And that's another thing. Your realtors, some realtors, they gonna comment, I tell my clients that was your realtor's fault. That was your okay, but we not here for that. I'm here for the people that if y'all have experienced this, or if y'all about to experience this because it's y'all first house in y'all newly constructed home, the taxes is not right. Pay extra. Let me tell you how crazy it was, because when I signed the paperwork, they said your payment, like the lender was, my loan originator was like, your payment gonna be $24.07, but when we got to the paperwork, it was $19.07. So then I said, hey, it's supposed to be 24. You said he said, no, don't even worry about it. That I always overbid. So when you get here, I can give you good news. And I'm over here giving him brownie points, sending him edible arrangements and shit. And nigga, you knew it was supposed to be $2,400 because the taxes, you didn't say that. So now I'm paying $19.07, happy as hell, paying $19.07. And then the next year come in and I gotta pay because the escrow didn't have no money. They done paid the taxes for me. Sir, lender, I didn't ask you to pay the tax. Don't pay the taxes on my behalf. You better call me and tell me my escrow was low. So they done paid the taxes. Now they talking about I owe them $34.50 a month for the next 3 years, or I can come out of my pocket 17, 18. We is struggling. The county, the city, the states, America is down. I can pack up the house and give it back to you.
My mortgage went up $1,000 and I am not okay. So let me tell you guys, for the longest time, people be screaming from the hilltop, home ownership is not it. Like, don't rush. And I will just be like, I don't understand it, because I'm literally chilling, like cheaper than rent. I was bamboozled. So let me tell y'all what they do not tell y'all about real estate. So they do an analysis every year from, at least with the mortgage that I got, right? And so they did an analysis, and basically my mortgage increased by $1,000. And I asked them why. And they were like, something about, my house is a new build. And so I guess they charged me for the taxes when it was just the land for 2 years. Then after year 2, they add the taxes with the house actually on it. And they were like, yeah, your builder is supposed to tell you. They didn't. They didn't. And so I asked them, can I sell the house? And they were like, there's no equity in it. You guys see me smiling, but come next month, I'm literally going to be in tears, because $1,000 extra a month, I legit want to move back home and live with my parents. But I don't have that option. I'm sick. I'm sick. Honestly, don't buy a house if you're single. Buy a house when there's 2 incomes coming in, because baby, you gonna need it.
So as you saw in the videos that I've just played, These new homeowners just received notice from their lender that their mortgage payment was going to increase. And in their cases, they're increasing by thousands of dollars, and it's shocking. This doesn't only happen to those who purchase new builds. Your mortgage can increase for a variety of reasons, but I'll dig in deeper why it's happening to new construction buyers in this video and why it's happening with such a huge increase. But reasons why your mortgage payment can increase could be maybe you have a mortgage financing strategy called a 2-1 buy down, and that's where your mortgage interest rate is reduced by 2% the first year and then 1% the second year. Then it reverts to the normal amount for the remaining of the loan term. So that will result in increased payments during that 2-1 term. Another reason why someone's mortgage payment can increase is because maybe they have an adjustable rate mortgage, an ARM. With adjustable rate mortgages, your interest rate is fixed for a period of time, and then after that period of time, your interest rate can adjust depending on the market. So that can lead to increases or sometimes decreases in your mortgage payment. Another reason why your mortgage payment can change is if you have an escrow account and one of the expenses that is paid out of that escrow account increases. So typically your escrow account pays your homeowner's insurance and your property taxes. If your insurance premiums increase or your property taxes increase, that can lead to your lender needing more money to pay those expenses on your behalf. So this is what you'll find happen to the home buyers in this video. They received notice that their escrow account did not have sufficient amount of money in it because of property tax increases, and therefore they're sending a letter letting them know that they will need more money from the home buyer in order to be able to pay these expenses on their behalf. But I'll dig deeper into escrow accounts and property taxes shortly. Property taxes or real estate taxes. What are they? Property taxes or real estate taxes, whatever you want to call it, is money that your county and or state collects from property owners in their jurisdiction. And the county and or state uses the money collected from property owners for a variety of reasons. I have my property tax bill right here, and it outlines what my money went towards. And it went towards a park district in my area. It went towards a local community college in my area. It went towards the high school district and the grade school district. So those are just examples of what the money from property taxes collected can go towards. So how is your property tax amount determined? Well, it all starts with determining your fair market value. That is where it all begins. And so for Cook County, I'm going to talk about Cook County. Our properties are assessed, and they are assessed or reassessed every 3 years. What they do is they determine the fair market value, and then with the fair market value, the assessed value is determined from that. And then a lot of calculations are applied, a tax rate is applied, and then when it's all said and done with these calculations, the property tax payment that is due is determined and sent to you the following year after the assessment is done. They use different characteristics about your home to determine a fair market value, and they use comps in the area for similar homes like yours, what they have sold for recently. And then I believe 10% for residential homes of that fair market value is your assessed value, and then calculations are made from that assessed value. It makes sense that the value of land will be less than the value of land with a structure on it. So what happened with these TikTokers with their new construction homes is at the time that they purchased their newly built home, the land was only assessed. There wasn't a structure on it. And since a structure has been added to the land, their home, the property was reassessed. And then eventually a new tax bill came out reflecting that higher fair market value, higher assessed value, therefore a higher tax bill. Your escrow account is what I call a forced savings account for your taxes and insurance or whatever else that needs to be escrowed. Your lender oversees this account, and it is so that they can oversee the payment of those obligations on your behalf. I say that it is a forced savings account because you're most likely going to be required to have an escrow account with your lender. I know for FHA loans, I believe they are required for FHA loans, and for some lenders it depends on your down payment or your loan to value ratio that will make them determine if you need an escrow account with them or not. There are some situations where it is optional and you do not have to have this account. If you have an escrow account with your lender, they conduct an escrow account analysis, typically annually. And when they conduct this analysis, they look at the balance in your account and they determine the projected expenses to be paid out of the account, and they determine if you have enough to cover those projected expenses. If you don't have enough, they will send you a letter with your new payment amount that will be sufficient to cover your shortage as well as to cover the upcoming expenses that they've projected. So that's what happened in these cases. The lender has received notice about an increased expense in the escrow account, and therefore more monies are needed to help cover the higher payments.
Okay, so now that my home is all fixed, you would think that my problems have ended with my home. Absolutely not. So fast forward, we're now in 2024, and I want to say in May I got a letter from a different mortgage company. Like, hey, your mortgage company sold your mortgage to us. Unfortunately, when we did the math, your taxes were not appropriately assessed because it's new construction. So not only is your escrow in deficit, your new mortgage is now going to be, if I can do the math correctly, $1,200 more than what you've been paying. So now I'm looking at this letter and I'm like, wait, what? My mortgage is about to increase $1,200 per month on top of what I've already been paying, and I owe back money in my escrow. So yeah, come to find out, when you purchase a home new construction, which I did not know, nobody told me this, they estimate the taxes on the property, and then once the tax assessor actually comes out and does an actual assessment, then you get the actual number of the property taxes. So essentially I was underpaying my property taxes just based on what the previous mortgage company had estimated.
I wonder if these homeowners would have qualified for their mortgage if the appropriate tax estimates were used. I wonder if they had known if they would have moved forward with the purchase. I know for at least 2 of these videos, it sounds like the individuals would not have moved forward had they known that their mortgage payment would increase so much. But then let's talk about, why didn't they know? Is it just they didn't do research? Nobody told them there's an important document that you're given 3 days before closing, and in at least 2 places on page 1 it's called the closing disclosure. You get it from your lender 3 days before you close, that you have time to review it and ask questions. But at least on page 1 there are 2 spots where it talks about taxes and escrow, where it says these amounts may increase over time. And so that should give you pause to have you wonder, why would these payments increase over time? So the closing disclosure outlines everything with your loan. It's given by your lender, and it talks about your fixed payments, such as your principal. If you have a fixed rate interest rate, it talks about that, what that monthly payment for principal and interest would be. Then it talks about the projected payments, and those payments are estimates. And then it breaks down everything and all the numbers in regards to your loan. So closing costs, it breaks down each expense with that, and it talks about your escrow account, it talks about your taxes and insurance, and it gives the dollar amount and the estimated payments. And like I said before, there's a disclaimer listed at least twice on page 1 and then again on page 4. This is a 5-page document where it mentions these amounts may change over time. So that is something that you have to sign also. So I just wonder if there's any review of these documents, either by their lender, by their real estate agent, by their attorney. Are these cases where these home buyers just did not have the right team around them, their lender, their attorney, their real estate agent, to tell them that their mortgage payment would increase? Or a lender purposely using lowball tax estimates just to get you to qualify? Some realtors and lenders are doing whatever they can to close a deal. And so I just wonder if that there's a little deception going on for those reasons. I know as your realtor, I would never do that to you. I have no reason to deceive you. I want you to be well and to be well informed, because a lot of my business comes from referrals. So I want to treat you right.
Guys, tell me why my mortgage went from don't judge me here. $3,200 a month to $5,600 a month. Backstory here is I was looking for a house back in 2022, and I put in offers on multiple homes. So we decided to go, they got declined, and they wanted 50 to 60 grand over asking price for the homes with no contingencies and all that kind of stuff. Long story short, I bought a new home with Ryan Homes. The worst decision I've ever made in my life, I swear to God, and I am paying for it till right now. Long story short, I'm actually selling that home right now. Bought a mortgage with Ryan Homes, and I am the last house that's built on this subdivision, the absolute last house. When I signed on the dotted line, my mortgage was 32 and some change, and I was fine with that because that's what I expected, the size of the home, X, Y, Z, yada, yada, yada. Come to find out that, again, I had a realtor during this time, but with new construction, Ryan Homes doesn't pay the realtor a commission. So I was like, well, okay, I'm not going to ask him to come in and do any kind of work because he's not going to get compensated for it. So I let him know what I was doing, and then ended up being no realtor. So anyway, next thing I know, I get the first tax bill on the property with land. On the property with the home build. The taxes were $16,000. $16,000. So that's not not the half of it. So I then go call, like, hey, is this right? Is this correct? Like, yeah, that's your correct property taxes. We're not sure why, but Ryan Holmes did your estimate based off what your taxes could be on the home because you're the last home built. So there's plenty of comps in the area that they can use as, hey, your taxes could be this. However, they use taxes off the land because it's going to show you a cheaper mortgage. Okay, so I'm like, okay, so what do you have to do? Well, you got to pay them so your property taxes go up. Okay. The next part of this is that being that my property taxes will be this, and being that the property taxes were underestimated for that year of 2023, I believe it was. Now my escrow account is negative $11,000. My escrow account is negative $11,000 because Ryan Homes only used property taxes on the land. So now I not only have to get my current property taxes updated into my mortgage, now I have the rears back taxes in my mortgage. People, when I tell you I almost lost my shit, I did lose my shit. I'm not gonna lie, I lost my shit. I completely lost my shit because it's something they don't tell you about new construction. And people will say, oh, you should have had your realtor, you should have had your attorney. And that, I guess I take the hit on that because I'm thinking I'm not going to use my realtor who I've been using to show me these houses because Ryan Homes, they don't pay a commission off the sale. So I'm like, man, that's not right. I'm not going to use my realtor to come in and do free work. I'm going to have to pay out of pocket for my realtor. And then So mortgage went from $32 to $5,600 a month. And I'm like, yo, this can't be right. So now I'm looking up property taxes in Libertyville and Vernon Hills on houses that are places, nicer areas than this. This is Antioch, Illinois. No knock against Antioch, but it's not Libertyville, it's not Vernon Hills. It's nothing. There's no restaurants. I mean, there is a few, but it's not built out like that. The infrastructure isn't in place like those places is. And I'm just kind of like, what the So, long story short, I know I said that before, but this fast forward. I'm sorry saying that. Fast forward. Unfortunately, the home that I thought I was going to be in for 7-10 years, that my kids would grow up in, I'm selling that home. because we can't afford it. And I refuse to be house poor and paying for a house that I'm just trying to keep up with. There's no way possible I'm going to, and let me say this too, is that the mortgage will end up being, even if I didn't have the taxes in the rear, my escrow account, the mortgage will still end up being, I did the math, it was like $4,000 something a month. Right, because my principal and interest was like 27. The property tax was like another 13 something. So it was like $4,100 a month. No, absolutely not. I refuse to pay $4,100 on a house, property taxes on that amount, and you don't have anything to go off of. So, yeah, guys, if you are thinking of doing new construction, if you are thinking going with a Ryan Homes, if you are thinking going with any new construction, any new development, specifically Ryan Homes, make sure that you look on that paper and it doesn't say, when it says taxes, make sure you ask them, is this property on the house after it's built what it could be or before? Because if you see something that says, unless you're in a different area, stuff like that, I get it, I'm in Antioch, Illinois. If you see something that's like $2,000 or $3,000 of property taxes, make sure you ask them, hey, is this on before the house is built or after the house is built? Because they can estimate what your taxes are going to be based off what they sold you the house for, right? They can do that. So, will they? Probably not. But again, Ryan Homes, because you screwed me. You have effed over my life, and this has set me back tremendously. I did a lot of hard work to build my credit, save money for a home, and I just gave it away because it's crazy. There should be something in the laws that says new construction builders should have to show you property taxes on what the home value, what your property taxes are going to be, because that would change everything. That would change your mortgage. That would change everything. And I would have told them, no, I'm good. I'm not buying this. I'm gonna keep looking. But it is what it is. Looking for a new home. Here's to chapter 2.
Yikes. He said his property taxes were what, $16,000? That's crazy. I just want to say he puts all the blame on his situation on Ryan Homes. It's not just Ryan Homes. So I just wanted to make that clear. This can happen with any new home builder, and it can happen to you if you go by yourself with no representation. He decided to not hire his realtor. He could have paid him or her out of his pocket instead of relying on the home builder to compensate him or her. And it would have been worth every dollar. The home builders do not work for the buyer at all. They are trying to sell a home. Their sales rep is trying to sell a home. Their lender, their in-house lender, which is what he used, is trying to sell him a home. So there's nobody representing him. Had he spent the extra money to pay the commission for his realtor or to go with his own lending company, he could have prevented all of this. So he's putting all the blame on Ryan Homes, but that can happen with any new home builder. They are not working for the buyer. They are trying to make money. It is a business for them. If you don't come equipped with knowledge about how taxes work and how loans work, you're asking for it. Their in-house lender may offer incentives and 2-1 buy downs and $10,000 off new stainless steel appliances. They may offer all of those things, but you may get just as good a deal by going through your own lender. This guy mentions a paper and he says, if you have it, review it and ask questions about it. I believe he is talking about the closing disclosure that I described earlier. So yes, review it and ask questions about it. Check for accuracy. So he's giving you some great advice there. That's the end of my video. Just a warning about mortgage payment increases. Whether it's new construction or existing construction, your mortgage payment can increase. I gave you some reasons why, but I explained why it was such a huge jump in the mortgage payment for new construction. I hope you gained a lot from this video. If you did, please like and subscribe. I really appreciate it, and I hope you watch my next video.